Ladies and gentlemen, boys and girls, welcome back to another episode of the Trades and Gains Market Recap Podcast. I'm your host, Max Pitts, and it looks like the markets are getting absolutely rocked again. I feel like this is how I've opened up the last three episodes, by the way, so let's just throw that out there. The markets are just getting rocked like they're in a Mike Tyson fight. We've got tariff drama, we've got inflation jitters, and big money making serious moves in the options market. So what we're going to talk about today is Trump's tariff chaos and the economic fallout that ensued, stock market breakdown, who's tanking, who's bouncing it, you know what I mean, and some options flow analysis where we'll talk about what smart money betting on currently. And then we'll also do a CPI report preview because I'm the only person who literally does that. So I'm going to continue to. And this is also going to be the next big catalyst that sends SPY to 535, allegedly. So should you be buying or selling right now, or do you take the Warren Buffett method and hold 27% cash and some of the highest levels of cash holding that have been seen between the years of 2005 and 2008 previously before this? Let's go ahead and dive into it, folks. So, let's break down the biggest news bombshell of the day. Trump's wild tariff policy swings. That sent the markets into complete and utter panic mode. What happened exactly? Trump announced a 50%, and no, we're not talking about a sale here, so calm down. This isn't a J.C. Penney fireside sale. This is a 50% tariff on Canadian steel and aluminum, shocking the markets to their core. Then he walked it back hours later saying, I'm looking at that, but probably so. What does that even mean? That's not even like a double negative. That's a double nothing at that point. But it's Trump, so he speaks in soliloquies. And if that wasn't enough, by the way, he threatened to increase auto tariffs on Canada, saying it would permanently shut down Canada's car industry. Like, bro, why are you doing this to us? We're not asking for this. But why does this matter? These tariffs would make steel, aluminum, and cars way more expensive, which hurts businesses and consumers alike. Auto companies like Ford, GM, and Tesla could face higher costs, leading to price hikes or job cuts potentially. Investors, if it's one thing they hate more than their ex-wives, it's uncertainty. And when policy changes happen this fast, it's going to spook the market and scare the living shit out of them. And that's what we're seeing. That is what is going on here, people. So open your eyes, look alive, because the market's free falling, baby. But what was the reaction to all this exactly? Well, guess what? The Dow Jones Industrial, our redheaded stepchild, fell about 500 points. Not great, right? And this was led by Verizon, which I have their service, so this is kind of insulting. Or should I be concerned about my Verizon service now? Because that tanked super hard, like bad. But moving on, the S&P 500 flirted, much like the Nasdaq already full-blown penetrated correction territory with a 0.8% loss in today's action. And the Nasdaq initially rebounded, but then closed red with a modest 0.2% loss on the day as investors dumped their riskier assets, NVDA. So, in summary, investors, they don't trust that Trump has a clear trade strategy right now. I think he's just up there free-balling it. He's free-balling it literally and figuratively. That man is not wearing underwear and just letting that thing swing and make decisions. If tariffs stick, expect higher costs, slower growth, and possibly more market pain. Again, SPY 535. Hello. I called. Yeah. That's my guess. We're going to 535 by next week. Now, if he walks these tariffs back, the market could rebound. That is the other scenario here. But again, the confidence is shaken. It's like if your girlfriend cheats on you and she says she'll never do it again, are you really confident that she won't do it again? I mean, she did it once. So, same thing, but way higher stakes. Now, with all that chaos, who got wrecked? Like the one girl who slept with like Bonnie Blue or whatever her name is, and who held up today? Stocks that got slammed: Tesla down 3.8%, but saw dip buyers starting to step in. I will say I've been seeing weird posts on LinkedIn too about people talking about how they're returning their Teslas because they don't want to be associated with the brand anymore. Interesting. NVDA is down 2%, continuing its pullback and showing that, hey, maybe AI is just as effective as predictive analytics when it first came out. It's a great concept, but from a practicality standpoint and a cost standpoint, especially in a down riding economy, it might not be the best area to put money in. I mean, think about it. You got 6 companies that poured 44 billion into that beast, and they're all scaling back their AI spending. And that's pretty much the northern star of, is AI still the hot girl, or are people starting to move on? We also had Apple, Google, Amazon all deep in the red as well. The Mag 7 is selling harder than the Marvel series that I'm pretty sure it was named after. Now, who survived all of this? Coinbase. It actually held up, likely due to a strong Bitcoin correction and correlation. Defensive stocks like utilities and staples also saw inflows as investors are starting to run to safety. Now, what's the big picture here? Tech stocks are leading the sell-off, which is not a good sign because like they low-key run they low-key run this shit. It's their world. We're just living in it, baby. And if the big players keep dropping, broader market weakness could follow as well. But options flow is showing some interesting plays. So let's go ahead and head over to Investor Central Club and break it down. Like I said, we right back with it to talk about some options flows and what happened in the options market, baby. Let's go ahead and dive straight into this. Now, to kick things off, SPY, $263 million in options flow. No, you did not I did not misspeak. 263 million came in today. And let's just say this was Usain Bolt racing a one-legged man, because we only had $26 million in calls against 237 million in puts, baby. That means these people think it's going down. Institutional players are hedging against downside risk right now. And our most common contract are the 527 puts expiring in April. 527. Mind you, SPY's at 555 right now. They're expecting $28 more to bleed out. And when we look at our small caps IWM, we had 76 million in options activity today, with another lopsided ass race. 4 million in calls against 72 million in puts. What is going on, people? That's a 17-to-1 put to call ratio, meaning smart money is betting on small caps getting hit hard. And this is why printing tendies, you'll see him not randomly tweet, but you'll see on his timeline, stop buying bullshit IWM companies. They're about to get crushed. He's been saying that since January. I think you guys need to open your mother flipping ears and start listening, all right? Because he's about to ruin the market. I mean, not ruin, but like, you know, like the song, because I'm about to ruin. Anyways, next up, we had coin. We had $75 million in calls with no puts. And that is a major, major green flag, people. With Bitcoin around 79K, traders might be positioning for another breakout, which would affect Coinbase positively, obviously. And NVIDIA, we had some mixed signals here. It's like the girl, you don't know if she wants to come back or not. We had 17 million in calls versus 13 million in puts. Indecision in the AI leader. Honestly, that's going to continue to happen. I feel like they're just always going to be 50-50, and it's just people gambling at this point. And then our key takeaways from options flow was SPY and IWM puts suggest market weakness and institutions aren't buying the dip just yet. Coin calls suggest Bitcoin bulls are still active in the background. And Tesla and NVDA mixed flow shows investors are uncertain in some sectors that are staples, but it's just not, it's not the best time, you know? So what's next exactly? The next major event on everyone's radar is the CPI, aka Consumer Price Index report on Wednesday, aka tomorrow. And here's why it matters. CPI measures inflation, and if it comes in hot, that means the Fed might not cut rates soon, which, let's be honest, they're not going to. It's just, there's no real scenario right now where that is even a slight possibility. And if inflation is cooling, markets could rally on rate cut hopes. Now, what are we expecting out of our CPI report? We're expecting year over year to be at 2.9% versus the previous 3% recorded. We want core CPI, which strips out volatile categories, at 3.2% against the previous 3.3% that was measured. And month over month, we're expecting a 0.3% gain, down from the 0.5% that was reported last time. If CPI is lower than expected, the market could bounce. But if CPI is hot, expect more selling, especially in growth stocks. Big money is already positioning those puts on SPY and IWM, and that is telling us everything we really need to know, because that might be the leak right there. That CPI, that might not be a fun time for some people's portfolios tomorrow. Now, what's the move here? Let's go ahead and think about this. How are we going to think about this, folks? Because that's all that really matters. I gave you all this data, but now we got to put it into action. So our bullish case is CPI comes in cooler than expected, Trump walks back tariffs, and the market stabilizes. Potential short-term bounce would then ensue. On our bearish case, CPI remains hot, which that's probably what's going to happen. Tariff uncertainty continues, which that's probably going to continue to happen. And more selling. Big money is hedging with puts continues. And let's be honest, that's probably going to happen too. My take here is short-term caution. Watch CPI and don't chase dip buys just yet. If we see weakness into CPI, that could be a buy the news opportunity. And stay flexible. You know, do some yoga, touch your toes, touch some grass, give your wife a kiss, cook your kids some breakfast, you know. But the market sentiment is shifting fast, people, so you got to stay on top of it. You got to stay on top of it like a fat kid stays on top of sugar. So drop a comment. Are you buying the dip, or are you sitting on the sidelines like the rest of the smart money? Hit that subscribe button. Go ahead and fist the like, and make sure you hit that bell notification so you never miss real-time trade updates, and are obviously my gorgeous face to deliver the market news to you on a daily basis. Anyways, my name is Max Pitts. This is Trades and Gains Daily Market Recap, and I will see you guys in the next one. I love you all. Mwah, mwah, mwah.